What's up? I'm Dan Fredenberg, and this is another chance encounter. Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house that's going to be torn down soon. I understand that there are power lines that are getting kind of close. What's up again? This is Dan Fredenberg, and that there is a commercial real estate building. I'm here with Beatty today. How you doing, Beatty?
Hey, good to see you, Dan. Nice to be here.
Yeah, I'm really excited you're here. Everybody calls Beatty Beatty. It's I don't know if you want to put in your last name. Is it Dweik or is it
It
Dweik?
is. You're right.
Is
But
it?
how it's spelled downstairs, down here in the bottom corner, is just how you'd find me on LinkedIn. My
Mhm.
full name is, by the way, Fuad. And when I went one time to a real estate conference, it was just too big to fit on a little piece of paper. So I ended up scribing BD. And from that point on, the name stuck.
That works. That works. And I got some exciting news for you, Beatty, which is today my very favorite audience member is joining us today. And why is my favorite audience member joining us today? It's because this is a chance encounter where I interview syndicators. That means buyers, sellers, investors, stuff like that. Now, why would I do such a thing? Well, part of it is because if you want to be involved in private deals, you need a documented prior substantive relationship, because when the SEC checks out your documentation, that's what they're going to be looking for. So I got to find out, what exactly are you up to in this business? What are your core competencies? And the exciting thing is that you get to learn how to effectively communicate on the subject of commercial real estate deals. But before we get too excited about that, is there anything else you want to say about yourself, Beatty, before we get started?
No, just excited to be here and happy to enjoy the journey. There's a lot I can talk about myself, but today's all about you.
That's funny. That's funny. All right, so we're going to talk about the distinct motivations first. Before I do that, I gotta say, but wait, check your eight. And BD, I don't know if you can look through the camera and into the user's device. And if you look at the 8 o'clock, it's their five. There might be this hideous looking red subscribe button that they should probably do something about. No, it's just a stupid joke I always do at the beginning of all of these. But the five distinct motivations, everybody has their own reasons, lots of different reasons to get into commercial real estate. But it's important to me to know why this person's going to stick with it. That's the biggest one, because these acquisitions can take months, and there's always got to be a big reason for it. Now, the first one that I find, some people, they are looking to preserve their purchasing power. And what does that look like? Well, if you have a portfolio of assets and the way you make ends meet is from the proceeds or profits from ownership, then the only time you're going to be making a new acquisition would be either when inflation is eating away at your purchasing power of your cash flow, or if there's an asset crash and you can just buy at a steep discount. That's why some people are making their acquisitions, but that's not me. For me, I'm trading time directly for wealth. And what that's all about is because I got a background in technology because of the CRM agency I opened in 2011. And the problem that I ran into with these different tech jobs is you're paying more in tax than anybody else because it's in the form of salary or wage. So it hit me, how can I pivot so that I'm getting rewarded in the form of deployed capital, aka equity? So that's why I made the switch from building the online funnels for real estate people to doing the syndications myself. But some people are attracted to this business because they want to take over their schedule. I mean, some of them, that it would actually be fast tracking their retirement, but other people, maybe they just want to work fewer hours per week or fewer months per year or something like that. But That's a little bit different from the next two groups. The next two groups, like this next one, they are so ambitious they want to buy their entire hometown. They're looking for that generational wealth to make sure that their great grandchildren never have to hold a day job. That's why these guys are going to be hustling into their 90s. So they're great to have on your team. But the last one they have a lot of similarity to the last one, but it's actually because they've picked a sector of society, or maybe it's the environment, or maybe it's animals. Who knows what it is? But they found out that you need a substantial amount of finances if you're going to make a big impact on that group that you want to help, and that's why they're making acquisitions. So, Beatty, as far as you go, which of those five, or what combination of them, would you say describes you best?
Wow, we do have similar backgrounds in tech, and I definitely resonated with the tech and the building wealth because that was exactly my experience in terms of I worked in tech. It was a great career, but then I rolled my money into real estate, and that's really what built my wealth. I got to retire from tech in 2019, and went full time into real estate for that reason. And the second part that I resonated with is health. And then help here is not some specific cause. I do have some specific cause that I help in terms of I donating 25% of my time to teaching youth. But the help part when it came to real estate or commercial real estate was being able to help other investors like myself that work in tech that don't have the time, don't have the knowledge, don't have the deal flow to really kind of, hey, here is the best deals that I could find that I'm investing in, and would you like to come along the ride? So that's really the two angles that I resonated with, Dan,
All right.
from what you showed.
Awesome, awesome. So the next question I have, though, it's about tolerance for risk. And see, sometimes we get these 20 somethings coming into commercial real estate, and I need to make sure that they understand that yes, there's a lot of money floating around, but it's still highly competitive, and there are enormous risks because, really buildings, it's the variety of nature is basically what you're up against. So there's all sorts of surprises. But to make sure that people understand those risks, I have this fill in the blank question. So if you would, there are many popular investment asset classes, but I think blank is too risky. BD, it can be real estate or non-real estate, but what do you think is too risky?
Uh, you know, I'd say my level of risk tolerance changed as it changed over time. As you grow up over time, I guess it's either scars or become mature. I remember in the late '90s, I was buying all the dot-com stocks, and 2001 came by, and almost saw the same game being played again, maybe in 2020, 2021, with people kind of doing all these shit coins. So what's too risky, in my opinion, would be things like, uh, I'm going to call it like um, the shit coins probably will be a
Mhm.
good one to, and didn't even touch that. I just really watched it from outside.
Yep, I completely understand. And that is, after all, why we are in commercial real estate. And if you haven't figured out yet, this thing just kills me. So that's eating a sub. So he is telling you to subscribe again because it's free.
You are
But
making me hungry. It's close to lunchtime here.
right. Oh, yeah. Yeah. There you go. But in every episode of Chance Encounters, I pull out the Dan Does Deals commercial competency cube with the 6 different core roles in a deal. And it only takes 2 minutes to go through it. But the reason why I go through it in every episode is because I want to make sure that you can effectively communicate on the subject of commercial real estate. And so to do that, if you go to dandoesdeals.com, it's totally free. You can print out your own copy. And like a dummy, I didn't even ask for your email address, which is the worst idea from a marketing perspective you can possibly do. But I want to make sure that there are zero things that stop you from downloading and printing out this die so you can practice explaining the different roles. And then that way you can work on, like, share it with your parents, your friends, whatever. But let's go through the 6 different sides so that way you know how my guest fits into these deals. The first role I'm going to talk about is the repositioner role. They are an acquisitions person, so they're looking at a bunch of different properties and they're doing a bunch of paperwork. Now, what is this paperwork, you may ask? Well, the first thing, there's a fancy word for it, they need to underwrite the deal. That means they need to do the math. They have to do the arithmetic to figure out, first of all, is this building even making the amount of money that the seller or broker is claiming it is? But the reason why I call these guys repositioners more than just an acquisitions person or something like that, or just an investor for that matter, is because they have to figure out how to change the property so that it's performing better than it was before the purchase. Now, the first place that they're going to look, and it's part of every repositioner's job, is to have a network of financiers. So that's the different banks and lenders and whatnot. And the reason for that is because if they can get a more advantageous loan than the one that the current owners are using, then that means it goes straight to the bottom line as profit. But let's assume that isn't the case. The next place the repositioner is going to look is operations. They're going to figure out how do we get those Benjamins stop going down those toilets. But there's more to it than that, and often it's outsourced to another company. But one of the places where a GP would be handy in operations, such as myself, I've got a marketing background. So if there's a problem with vacancy and the operators just have no way to deal with that, well, that's where I put on my marketing cape, and also automations and whatnot. But the repositioner will likely not be able to make enough extra space just working on cutting costs on operations. So often they get a contractor team to do a value add. Okay, so that's renovations, and the idea being that the next tenant or resident would be happy to pay more than the previous one because the unit's actually nicer. But you have to be super duper careful with your expenses while you're doing these renovations or value adds. So many repositioners have the same problem that I do, which is I'm from the internet. So that means I need a local. I need boots on the ground, somebody who can be there in an hour or so, because that's not going to be me. I'd still be stuck at the airport. So the local is the accountability piece, making sure that the contractors are keeping to schedule and the operators aren't cutting any corners and all that kind of fun stuff. But when the repositioner turns around to the financiers and says, hey, I want to take over this property and it's, let's say, 350 units and it's tens of millions of dollars. You don't happen to have, say, tens of millions of dollars you want to lend us, do you? Well, the financier is going to have one other question on their mind, which is, who is your sponsor? So let's say you have a group of pals, maybe you're a physician or something like that. Then maybe you might want to pool your resources and take over an apartment complex. Well, the problem is you won't be eligible for a commercial loan unless you have a sponsor who already owns a similar asset. On top of that, you're also going to need a certain amount of liquidity. And between the ownership team, you need a balance sheet of at least the amount of the loan. But if you have all those pieces, you've got yourself a commercial real estate deal. So, Beatty, I know that you do some financier, as in passive investments, but I'm not sure what other roles you tend to enjoy working on. So, what are you most likely to contribute in your next deal?
I would say I definitely do a lot of the due diligence part on the early part of the repurposing or the acquisition to really see, hey, does the deal have enough skin in the game? Yeah, enough skin on the bone, actually,
Mhm.
for it to make sense. And then I would say double check in the some of the assumptions that people are taking when they're kind of putting together the underwriting.
Mhm.
That part I enjoy well, just my background and my training being an engineer, I can crunch number, just like our friend Jason and others. But uh, that part for sure. I um I did asset management as well for some time. Not
Mhm.
my favorite thing to do, but it's a necessary evil. I know how to do it, but not necessarily, get excited about it. But it's definitely a necessary evil. And like you said, when you're asset management, you really need to have that boots on the ground, in some sense. And whenever there's a problem, especially even if there's a property manager, you're there stepping in, making sure that you're taking care of the problem.
Mhm.
Construction, not my gig. I did a bit of a BRRR, and dealing with builders and fixers and but not my cup of tea. But I
Mhm.
would say probably the first two is the areas where I would like to contribute.
All right, awesome. So then my next question then has to do with ideal property. And when syndicators, investors are saying, "Hey, what's your buy box? What's your ideal property? What's easier to say yes to, more difficult to say no to?" There are three main things. The first one's going to be geography. Where is it? So which state? Which county, possibly even which neighborhood. And on this show, you should be pretty careful about using acronyms and stuff like that. So, like I do a lot with Wichita Falls, Texas, which is near DFW, which is Dallas Fort Worth. So be careful with using acronyms with that, but you're going to need to know the geography. Second thing is going to be the size of the deal. Different groups of people are going to be taking over 15 unit deals compared to 150 or 350 unit deals. So the size is going to matter. We usually talk about multifamily on this show, so unit count is the most common way to show the size. But of course, industrial or warehousing, it'll be square footage. But the third one is class. And class is separated into two parts. And the terms I use for it, the first one is the condition. So that means how old is it? Is it brand new or is it ancient? Is it all beat up or is it, basically up to date? Is it full of amenities and luxuries or is it really, really bare bones? So that's condition. That's the first meaning of class. The other one is the area. And when they're talking about the area that the property is located in, it's like, what's the crime rate like where the property is located? What are the school districts like where the property is located? How much traffic goes by that area? And both of those two meanings of the word class are used with the same system as in grade school, where you got A plus at the top, and then A and A minus and B plus and so on. But BD, as far as you go, what's easier to say yes to? What's your ideal property?
Well, again, I do invest in quite a bit of types of asset classes. But let's just say if we stick to multifamily for a second, I do prefer major MSAs, major metropolitan markets, like the Dallas Fort Worth, for example. I'm hot on Texas. Arizona softened a little bit, but I would say Florida is still definitely strong. North Carolina is being taken under the look right now. When it comes to class, even though there's definitely more money to make, in terms of an upside potential for a Class C, based on the current market condition, we've kind of shifted more towards a Class B based on being able to reduce the risk. And if we're talking anything outside multifamily, like what we do on some of the active repositioning of commercial retail, my favorite is single tenant commercial retail buildings that are vacant.
Mhm.
No loans, so it's much lower risk from a bank basically coming and take it over, but it does require a significant amount of capital. But you're able to acquire it at a really decent rate. We focus there on three different aspects. Demographics in terms of we would like to see in the 1 mile, 3 mile, and 5 mile population density of 5, 25, and over 50K.
Mhm.
When you look at income, we would like to see 50K or more in terms of the average income.
Mhm.
And when we look at other things like vehicles per day or where it is with respect to main roads and intersection corners, we like to see a total, especially if it's a corner unit, we like to see a total VPD vehicles per day of about 30,000 or more.
Mhm. Mhm.
So
Beautiful.
here's just two different classes of properties and two different assets, completely different things we would look for, and there's a completely different repurposing strategies for each one of them.
Mhm. Mhm. Awesome.
For
Awesome.
multifamily, the value add, or the commercial real estate, it's basically you're acquiring it with zero income, but it was zero income at the time,
Mhm.
and then you're backfilling with a tenant, you're rehabbing it, and then doing a cash out refi and just create it as a cash flow vehicle.
Mhm. Mhm. Exactly. Now, I may have missed it. What was the unit count for multifamily? That's the sweet spot.
Um, I definitely like to see nothing less than 100,
Mhm.
up to 300.
Okay.
In terms of deal sizes, we like deal sizes between 10 and 25 million.
Mhm. Mhm.
But beyond that, it gets really, uh, you, you know, it becomes a different class of an investment.
Right. Exactly. Good stuff. All right. So my next question, though, is who you're disproportionately well suited to help, and because nobody is all of the sides of the die for any meaningful amount of time, we all are eager to build teams, give referrals, but still, because of our skill sets, we're going to be better off helping some people more than others. Me personally, it's the sponsor KPs that I've been looking to meet through most of my career so far in commercial real estate, and that's because of my CRM background, all the web assets for courses, live event tickets, and products like books and whatnot for sale online. But more and more, I find that getting more locals is important to me because, after all, I'm from the internet. But BD, as far as you're concerned, who are the best people to reach out? I know you're fantastic and very generous with your time with everybody I've seen, but who are you disproportionately well suited to help?
Um, I would say, people who are interested in kind of learning the game and being able to trade their time to kind of get knowledge.
Mhm.
When I shifted from, being a full-time tech person to going full-time into real estate, I actually worked for a real estate fund manager for 12 months with no pay. And there I kind of learned how to put property under contract, run due diligence, do inspections, uh, everything that it entails in all aspects of it. It also gives you a bit of taste in terms of, hey, what are the different actions that take place along every time of aspect of the acquisition, and what certain things that you like and what certain things you don't like. So as you want to go double down in terms of your career in real estate, it gives you a better feel about where you want to spend your time. And for me, it was definitely around numbers and money. And my I had one teacher that always told me the closer you are to the money, the better you're going to be. So if I'm around the capital raising side, if I'm around, being able to source money for the deal, for the, guaranteeing on the loans, these are the type of things that I enjoy. It's got money and it's got a lot of calculations.
All right, awesome. I love it. So then the next question then is how to reach out. And me, I've got the distinct last name, so I'm easy to find, and LinkedIn is the best social media platform to reach me. But on my screen here, if you scan this QR code, that goes to the FAQs page of 506 BME, which is the service where I help different syndicators document their substantive relationships for the SEC, so that way they know that you have that knowledge of their level of sophistication, appetite for risk, and all that kind of stuff, which is not something that CRMs generally do. But as far as you're concerned, BD, what are the best ways to reach out? Is it through a website, or is there a social media platform you prefer? How should they make it happen?
Yeah, I mean, I am on LinkedIn, Dweik as the name calls in on the bottom, but sometimes we do get massive amounts. I would say the best way is to go to my online business card. It's bd10k.com. So bd10k.com. And in there, it has a lot more background about who I am, what we do, what are the type of projects that we work on. And yeah, feel free to download the contact, shoot me an email is probably the best way to connect.
All right, beautiful. And then the only thing that's left then, it's actually not for you, BD. It's for you in the audience. It's a public service announcement, which is if you've been watching this episode and you've been experiencing like searing pains in your eyeballs and like migraine like symptoms, it's probably the downright hideous red button under my hand. It says subscribe. And if you want to get rid of that awful button, all you have to do is click on it, and it doesn't cost you anything. And to be honest, the reason why I want you to hit it is because then YouTube will actually start paying for these videos instead of me. And I think that would be amazing. As far as what you get out of the deal, it means also that my videos might show up on your list of suggestions, but you can go ahead and ignore those suggestions. After all, I appreciate you spending this time with me. Just like Beatty, I appreciate you joining me today. It's been great getting to know you a bit better.
Hey, absolutely, Dan. Lovely to be here. Thanks.
Awesome, thanks. Make sure you 506B me. Any syndicators, make sure you 506B me.
Hi.
Oh, hey, yeah, here's my code. You got your QR code scanner? Okay, yeah, oh yeah, just hold it right in the square there. Okay, cool. And now you hit open in browser.
Okay.
Okay, are you already logged into 506B me?
Yes.
Yeah, okay, cool. Yeah, so there's my video. So now I'm already on your watch list. So when you get back to your hotel, you can find out what my core competencies are and my level of sophistication. Sound good?
Yeah.
I love your hat. Real estate's a scam. That's really funny.
Yeah, it's funny.
Nice meeting you.
You too.
506 B me, everybody.